good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 700. And more will just keep coming at you. Traders, this video tonight is being filmed on, what is this, Tuesday or Wednesday? I've had so many days at OMNI camp, I don't remember. This is Tuesday night for Wednesday, right?
This is Tuesday for Wednesday.
Being filmed on Tuesday night for Trading Wednesday. That would be March 2nd, 2011. Traders, don't forget, before we get into the video, futures trading is very risky and can cause substantial financial loss. If you do not understand what you are doing in this game, you should not be in it. All right, traders, what do we have on the board? Oh, I'm sorry to say we have a boo red OMNI. Traders, what a difference a couple of days can make. When I left you guys on Thursday, I started my OMNI camp Friday, Saturday, Sunday, Monday. Friday and Monday basically set us up for the worst thing that we could have wanted to see in the indices, traders. Bear flags are flying all over world indices charts. I mean, all over world indices charts. There are bear flags in the Russell, in the NASDAQ, in the S&P. They're in the Dow. They're in the transportation average. You can see them in the FTSE. They're all over the place. The Nikkei, they're everywhere, traders. And you know me, I've been bullish, but I am not blind. When I see something like bear flags flying all over the place, I put a red OMNI on my board. You know I will morph with any market moves. I am a bull, yes, when it's bullish. I'm a bear when it's bearish. And I think on Wednesday, we are bearish. So traders, certainly do your homework. Look for those bear flags. I will show them to you in a video, during this video in the chart segment. Just for the traders that may not recognize bull and bear flags, that is what a bear flag constructs itself into. It sort of looks like market moves down, 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 and then runs up in sort of a parallel fashion. And there's your bear flag. The next thing is a breakdown. Traders, we have them all over our charts. I even see them in other charts. I see them on grain charts. I see them all over the place. But for this video, we are going to concern ourselves with the world indices markets. Traders, I do not like what I'm seeing here. Let me say this. Do not fall in love with the downside because I don't think we're getting ready to crash, but a setback is likely. What is going on? Well, we know that fundamentals always come out in the charts first, right? And now we have bear flags across the spectrum in our charts telling us there's a bearish fundamental out there. What's the bearish fundamental? The biggest of all of them right now is what if Saudi Arabia goes offline? What if the freedom fever works its way across the Middle East and stops Saudi Arabia from putting out oil? That, my friends, is what's out on the street. I keep seeing it on every channel, CNBC, Bloomberg, you name it, I see it everywhere. And all they're doing is pumping the fear out there. Watch out, the oil's not going to flow anymore. It's going to be $150. We have not seen any stoppage in oil yet. We've already seen oil at 104, almost 105. And we see oil again at 100 now, even though it had a pullback. Traders, if you'll recall, the oil market, when it hit above 125 and went from 125 to 145 a couple of years ago, it basically broke the back of world economies, the U.S. economy, the world economy. The back was broken. Here's the thing about that. When oil got up to 125 and then hit 145, we were basically in the middle of a really big run-up. The stock market was booming. Real estate was booming. Banks were lending. Things were crazy. But we were not as unstable as an economy as we are right now. Remember, we were in a boom when the crude oil made us bust. We are not in so much of a boom right now. Yes, we've had a rally since 2009, but we're not really on our feet. The world's economy is not as stable as it was when the oil hit 145. We do not need to see oil go up there because anything past 110, 115 is going to cripple us. So traders, let's hope Right now, no oil has stopped flowing, right? This is all on the speculation that oil might stop flowing. Let's hope, just hope that that doesn't happen. You know, we're commodity traders, and a lot of commodity traders actually thrive on disaster, but not a disaster like this that's going to wreck the world's economies. I mean, we just don't need that. So let's hope the oil backs off. Let's hope things calm down a little, but we are prepared for anything that happens, and traders, with all these bear flags flying all over the place, I am not sure what's coming next, but I know we got some downside coming at least for tomorrow. So this video is to prepare you to possibly get short tonight into tomorrow and let this thing drop a little bit. Now, traders, I've had an interview on Neil Cavuto. We're getting there, baby. We're getting to television. I was on CNBC. Now CNBC wants me back to do a show on Asia, CNBC Asia International, and that should take place tomorrow night at about 9:40 Eastern Standard, or OST, Omni Standard Time, as I love to call it. So traders, look, we're getting very close to me giving you the projection for 2011 on television. It's coming. I just can't jump out in my first or second interview and use that to take my time. They'll probably hang me and throw me off the set. But I promise you this, the moment somebody goes, Oscar, what do you think? I'm going to be able to speak about what I want to speak about, and I'll get that call out to you, traders. So let's hope I get a few more interviews and I can belt it out. What's beautiful about it is we're dipping right now, and it's probably a good thing for our 2011 call, because when I give it, you may have a chance to position yourselves. So a good thing, we're finally making television. Yeah, go on, me. We'll see what happens. Traders, if you want to see the Neil Cavuto interview, there is a link on our site. And we will put the Asia CNBC interview that happens tomorrow evening on the site as well. Please enjoy. All right, traders, listen, I'm going to show you some charts in just a moment. If you like what you see in this chart segment, please come on down to www.livewithoscar.com. Jump into my free trading rooms and allow me to teach you about the bear flags and show you what we expect tomorrow and how to get a projection on how far we could go. Traders, with no further ado, let's go look at some charts.
Houston, we have a problem.
That's right, Houston, we got a big problem here. You better believe we got a problem. Traders, what is that before your eyes right there?
A big bear flag.
A big bear flag in the Dow Jones Transportation Average, the leader of U.S. indices. There's another problem on this chart, traders. Our OMNI average has been penetrated severely. There's been a settlement below it already. 3 settlements below it. Looks like we're going to have to fall in love with that downside, whether we want to hear that or not. At this point, I'd like to say do not fall in love with the downside, but I do expect some to happen on Wednesday and maybe even Thursday. That bear flag is absolutely a bear flag. Being below the OMNI average is absolutely another sell signal. The leader of U.S. indices is pointing lower, and traders, I think we have to follow the red OMNI on down, at least for trading on Wednesday, and then we'll take it, of course, one day at a time. But here's your leader. Here's your big bear flag. Remember, as I showed you on the board, the flag basically constructs itself like this. There's bars, of course, all the way down, and then there's bars that go in here. But that's your bear flag. You have that formation there. The breakout is to the downside. You've seen it started there already. Traders, I don't like what I see for the next few days. Let's look at another chart. Okay, traders, the Russell 2000. Look at the size of that bear flag. Remember this. The leader pulled us down and below the OMNI average, right? Well, if we're playing follow the leader, that is likely where the Russell has to go next. Coming down here to test the OMNI average. That is a big bear flag in the Russell. That's another one of our indices that looks bearish for trading Wednesday. Let's look at another chart. Next on the board is the NASDAQ, another one of our leading indices. Traders, look at the size of that bear flag. We just started to break out of it again today. In fact, the bear flag was a little more shallow, but then after today happened, it grew out to here. So now we have a bigger bear flag and likely a larger projection to the downside. Traders, don't let me scare you about one thing. I'm not expecting a crash. I am not crash-minded. I am not of that school of thought. We have been in a booming bull market. A pullback is healthy. We are heading towards tax time now, which is next month. A pullback down to the Omni average is something that would not scare me, but I'm not going to be bullish through a pullback, so we will have to sell the rallies at least on Wednesday, and then we'll see what happens after that. Let's look at another chart. Okay, traders, the next on the board here is the E-mini S&P Daily Bar. It is the one that we love to trade the most, and boy, oh boy, is that a bear flag. It is beginning to break down from that bear flag. If we connected our trend lines right here, we're starting to take out that trend line right now. We are below it with the bear flag. The bear flag illustrating the fundamental that's out on the street right now, creating the herd mentality to sell this thing. And if you'll recognize what this day is here, it is an outside down day reversal. What does that mean? The bar from yesterday was this big. The bar from this morning was this big. It went up. It came all the way down lower than this bar, higher than this bar, and settled below it. That, my friends, is an outside down reversal. That's what we have now in the S&P and many, if not all the other U.S. indices. That is not boding well for the upside on Wednesday, traders. We will be selling rallies on Wednesday. Let's look at another chart. Okay, traders, we looked at some U.S. indices. Now we're starting to go around the globe. Look at the German DAX. We fell out of this wonderful channel that we've been in for a while, and if it's going to follow the lead of the Dow Jones Transportation Average, the DAX is likely going to come down here to our Omni average. But as you can see with the DAX, there is some kind of a bear flag here as well. Just depends on whether or not we fall out tonight into tomorrow. But being that we are below that red channel, that does not look bullish either. Let's look at another chart. Traders, staying with the international theme, we're looking at the FTSE now, the London Stock Exchange. Big bear flag, falling down out of the bear flag, testing the Omni average as we speak. It basically runs right along the bottom of this. So we're testing our Omni average. We have a bear flag. We're breaking down out of the bear flag in Europe, in Germany, here in the U.S. Let's look at another chart. Traders, the Nikkei, look at the bear flag here in the Nikkei. We just broke down out of it last night. We're probably going to break even lower. So not only is it a problem here in the U.S. with these bear flags, but it's in Europe and in Asia. Look at that Nikkei chart and wait until you see the next thing I'm about to show you. Okay, traders, this is the first debut of this chart. I have not mentioned the Hang Seng to you in many videos. I watch it constantly, and what I'm looking at here is something quite disturbing, and let me explain. Back in 2007, traders, I brought you many videos, but what I did bring you in those videos, the point behind that is this. I showed you a series of head and shoulders with multiple smaller head and shoulders inside the larger head and shoulders, and said to you traders that is very reminiscent of a topping market. When I see multiple head and shoulders building, and inside of the shoulders and the head and the other shoulders are more head and shoulders but smaller ones. In other words, head and shoulders here, there's a head and shoulders here, there's a head and shoulders here. Inside of this, and this, which is a head and shoulders, there's one right here. There's a head and shoulders itself right there. That is a multitude of head and shoulders all coming together after a big rally. Traders, that is basically what topped out the U.S. stock market back in 07 leading into 08. This very same pattern is now beginning in Asia. Keep your eye on the Hang Seng Index for a clue. What else is going on? We have fallen below this Omni average right here and have stayed below it now for quite some time. Once we got below, it was here. We went down, came back up, came down, hit it again, and have failed each time at this Omni average. So between the head and shoulders collecting together and getting below our Omni average, it's starting to look like Asia may have a problem, traders. So let's see, maybe the money swings out of Asia and comes back to the U.S. and Europe. We don't know yet. We're day traders, one day at a time. But overall, longer-term view of this chart, the Hang Seng, that's starting to look bearish, traders. This could be a big top. Keep your eyes posted on the Hang Seng Index. Okay, traders, the last chart of the evening. Many of you, if not all of us, I'm sure, watched Bernanke's testimony today. According to Bernanke, inflation's not a problem. This is the CRB index. As all the blind traders on this planet can clearly see, there is no inflation in our markets at all. I wouldn't call that inflationary, would you? Let's step back for a moment. If you take all the commodities that we use to eat, sleep, drink, and live with, this is a gauge of those commodities. Is there inflation? Well, I don't know. According to the Fed, there isn't, but I kind of look at this slightly differently. Let me see if I can give Ben a little lesson here. Ben, are you listening? Hey, Ben, when a chart starts down here and works its way all the way up there, and that chart is a gauge of inflation, it is bullish on inflation, not bearish. Again, Ben, just in case you missed it, let me do this one more time. If you're looking at a chart and you're going to get on TV and talk to us about inflation, if the chart starts here, works its way all the way up there, and you say it's not inflationary and it won't hurt our economy, please don't present us with that figure. Do me a favor, if you're not going to use the chart, don't say anything about it, because I got to say this. That is bullish, 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 bullish. And the problem with that is this is all the foodstuffs. This is everything that we use to survive every day. So traders, there is inflation. They say it's not core inflation, but I don't know. It hurts the core of my wallet every time I go shopping. So I'm not sure what to call this, but the CRB certainly looks inflationary. And if raw materials are getting more expensive, the companies that have been recovering lately in our stock market are going to have to pay more for those materials. It's going to cost them more to create product. And if oil is going up, it's going to cost them more to ship their product out to the consumer. That is not good for the overall picture. Traders, pull your own charts, do your own homework. Look at that CRB index. Tell me if you see inflation. Maybe Ben needs another pair of glasses. We'll see. So, traders, there's my technical argument for that horrid red arrow. But if Omni's red, I'm bearish. That's the way it works. All right, traders, sorry about that little rant to Ben Bernanke. You guys know I'm actually a supporter of Ben and what he's done. However, you've heard me say this at the Trading Academy many times. If Jesus himself sat next to me and said, Oscar, the market's going down, if he could not show it to me on a chart, I'd look him right in the eyes and say, sorry, Jesus, you can't show it to me on a chart. It's not going to happen. Well, maybe I'm a supporter of Ben, but don't get on television and stand there and say there's no inflation when you pull a chart like the one I just showed you. And sorry, guys, that's about as inflationary as anything you're ever going to see. So, Ben, even you, baby, if you sit down next to me tomorrow and tell me the CRB index is going down, if you can't show that to me in a chart, it is not going down. So, read the charts, believe in what you see on the charts, not what you think, not what you hear. Believe in what you see in the charts. They are the Bible of technical analysis. All right, traders, so there you go, video 700. I showed you the bear flags. We do expect the breakdown. As always, a stop is your best friend, and never, ever, ever trade these markets without stops. Put your stop in first before you put on your position. Traders, for tomorrow, listen to this. Let's say you're bullish minded for tomorrow, and I'm sure many people will be buying the dips. However, we're going to sell into this until that bear flag shows its true colors. But let's say you're bullish minded for tomorrow and you decide you want to get long. Imagine if you did it this way. I want to get long, tap, 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 buy 10 at the market, enter. You get filled, and the moment you get filled, we get another one of those flash crashes because everyone's nervous, and tomorrow we spill the bottom out. What happens to you? You're long, you never placed your stop, you are going to get reamed. You know what's going to hurt tomorrow, right? You're going to be limping like this after a while. You do not want to trade without a stop, and you don't want to put an order in without a stop. Let's reverse that for a moment. Let's say tomorrow you're thinking about buying, you put your 10 lot sell stop in first, and boom, a crack comes out of nowhere because the market looks bearish. You will end up short with your sell stop by accident and profitable, but you will not end up long without a stop. Place your stops first. Almost nothing can go wrong if you put your insurance policy in before you buy your product. Okay, traders, that's about it. Hey, thank you so much for waiting 4 days for this next video. OmniCamp was fantastic. Traders who came to OmniCamp, you Omniacs, I got to say that was a fantastic time. It was almost magical, traders. I really enjoyed your company, so thank you so much for coming out. We will be having another OmniCamp. We'll put the schedule in our next video. We'll put a schedule up on the site. We'll let you know when we're going to hold it, and you can start filling out your applications to come join me in Vegas for an OmniCamp coming soon. All right, traders, give me calling time day or night, 702-629-4755. I'm out of here. I want to go to my chat rooms. I want to go watch the markets. I will see you at the OMNI Trading Academy. Okay, traders, keep your emotions out of trading. One of the best things you can do to help yourselves with that is to put your stop in first and say this to yourselves over and over and over again. And you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.